Welcome to Newspresso. Here is the top story in the past 6 hours. The morning started like a blockbuster movie. Stocks were on fire. The S&P 500 surged close to 2%. Nvidia seemed to be on a rocket. By lunch, though, the excitement fizzled out. Nvidia's share price slipped a percentage. The rest of the AI giants felt the same drag. The overall market mood was a mix: cautious optimism and uneasy data. A jobs report that didn't live up to expectations, Hunevan labor market signals. And a Federal Reserve had kept its policy stance. It remained ambiguous. And then the plot thickened. With the appearance of a billionaire commentator, Ray Dalio, Bridgewater guru, jumped onto CNBC's stage and warned that the rally might be a bubble. He didn't throw the "sell everything" advice. Instead, he said investors were misreading the underlying mechanics. Dalio compared scene to Mark 1929 and 1999, saying that while it wasn't identical, indicators he tracks suggest the US is inching toward a critical point. He added, "We don't have pricking of bubble yet, but a lot can go up before it bursts." Talca of the town chipmaker Nvidia released earnings, and words hit hard. $57 billion for the third quarter, a 22% jump, a 60% jump from ago. Data center revenue alone reached $51.2 billion. It rose 25% and 66% year over year. Company confirmed $500 billion AI chip pipeline in 2026. Nvidia's Jensen Huang took the earnings call. He dismissed bubble fears outright. He argued AI compute demand isn't tied to trend. It is linked to 3 overlapping revolutions. These revolutions include non-AI software. It also involves the surge of generative AI apps, so-called agentic AI that works without user prompts. Dalio's caution goes beyond Nvidia headlines. In a long essay released on X, he explains that bubbles don't burst. They burst when investors suddenly need cash. They must pay debts or taxes. They must also meet liquidity demands, forcing them to sell assets. That forced selling, not a dip in earnings or a change in sentiment, is what historically triggers the cascade. He points out that the top 10% of Americans now hold nearly 90% of all equities, and they account for about half of all consumer spending. The wealth concentration has hidden the deterioration in the lower half of the income ladder, producing what economists call a K-shaped economy. High-income households sprint ahead while others lag. Moody's Analytics chief economist Mark Zandier and Morgan Stanley wealth management leader Lisa Shallett have both described the inequality as completely wackadoo, noting that spending by rich households is expanding 6 to 7 times faster than among the lowest cohort. Even Federal Reserve Chair Jerome Powell has acknowledged the divide, citing a bifurcated economy, where upper-income consumers keep spending while others trade down. Dalio says this environment makes bubble dynamics especially dangerous. Margin debt is already at a record $1.2 trillion. California is considering a 1-time 5% wealth tax on billionaires, a political shock that could trigger mass liquidations. Monetary tightening is another classic trigger. A tightening of monetary policy is classic, Dalio said, but also something like wealth taxes can happen. He is not telling them to sell their holdings. Instead, he says bubbles can keep rising. They can deliver enormous gains before they crack. His message is to understand the risks. Diversify and hedge. He cites gold, which hit all-time highs this year. It is a potential safe haven. Markets move deeper into unfamiliar territory, so the story is twofold. Nvidia's triumph shows that the AI boom may keep. It lifts stock. Dalio's warnings about easy credit and wealth. Vulnerability to liquidity shocks warns of risks. They highlight tightening bubble mechanics. As he puts it, I want to reiterate, a lot can go up before the bubble bursts. These circumstances have, throughout history, led to great conflicts and great transitions of wealth. The next time the market moves, watch for the cracks that may start to show, because the bubble could still be inflating before it bursts. Subscribe Newspresso. Never miss a major global headline.